Hey guys, Chris Wong. I'm filming this video on July 5th, 2024, and I'm just going to be talking mainly about margin, any ETFs I bought today. So as a disclaimer, I'm not a financial advisor. I'm just a guy who's interested in building a portfolio. So I was watching videos on YBIT and they were talking about Bitcoin, talking about YBIT. So I decided to use a little bit more margin and get a YBIT. So I didn't buy a huge amount, just a small amount invested, and I used my margin account. So before I bought it, I saw on Questrade it was 30% margin requirement. And I also saw that it was a drop in the Bitcoin price, and I saw that it was ex-dividend date. So the dividend has already been declared, it's already been issued, and I won't get the dividend the next payout date in the next couple days, but I'd rather have a lower stock price and wait until next month to get the dividend. I also saw that CONY, CONY, it dropped down as well because of the massive dividend payout. So at around 1850, I decided to use a little bit more margin and get more CONY, and that way I can average down my position. So I think right now I went from like $20.40 down to $19.71. I don't know if I'll be adding any more into YBIT or CONY, as I don't really like having a high amount of Bitcoin exposure or any crypto exposure. I like to keep it small, and it's not something I fully understand yet. So I picked CONY and YBIT to invest in for the second week dividend payout because they are both within YMAX. They both have 30% margin requirement in Questrade, and they both have very high dividend payouts most of the time. Now it's hard to predict YBIT's payout because it's only been out for like a month or two, but just predicting it should have a very massive dividend payout going forward, but I can't predict that until I actually see it. I would prefer to put more money into Alti and YMAX because they cover more than one company, and especially YMAX covers all the YieldMax ETFs, and the dividend yield for YMAX is quite high, even higher than some of the other stable ETFs that are owned by YieldMax. So like Microsoft and Apple, the yield happens to be less than 30% a lot of the times, but so far with the distributions of YMAX, the distribution yield happens to be around 40%. So the funds CONY and YBIT, I picked those ones on the margin account because I'd rather pick a single stock ETF that has a very high distribution yield percentage than pick something that's less than the YMAX. So it is a risk I'm willing to take, and because it's in my margin account, I'm not worried about contribution room. So in my previous videos, I talked about how I would limit my margin to 50% of my TFSA and Questrade just to protect myself, and in case I want to see any other opportunities. So now that I see an opportunity, I don't know if it's going to go any lower. It's hard to predict that, but I see some opportunity, so I'm okay to use a bit more. And since I got at least one distribution from the Defiance funds, so now I feel a bit more comfortable using margin, but I still would put a limit on myself just in case I make any mistakes. So just a random thought. So the plan to use margin for very high yield dividend ETFs, especially if they pay every week or every month, is meant to be more of a long-term approach. The short-term approach would be trying to time it, but most people are not good at timing the market or timing the funds in order to try to get the lowest price possible. But getting the dividends to cash flow or pay back the negative balance in the margin account, and hopefully over many months or a few years later, especially with the high yields, it should be able to pay back the margin. Now it's not 100% guaranteed and it's not financial advice, but it looks like if I were to use a little bit of margin for Alti and expect 100% dividend yield all the time, so expecting at least $1 a share in dividends every single month, then in, let's say, 13, 14 months, it should pay back the entire fund that I had on margin already, because I should get all the money back in dividends after at least a year of investing in ULTY. But I also have to factor in margin interest and withholding tax because I'm Canadian. Investing this way with margin, I have to look at it from a more long-term approach, just like I invest in my other accounts without using margin, because I gotta collect the dividends monthly every single time. Hopefully it pays back the margin, but then the stock prices go up and down. So if the market goes down and my total market value happens to be less than my cash balance that's negative, then if I try to sell all the funds when it's down, then I will still owe Questrates some money. I know using margin can also be used to buy stocks at a low price. If, let's say, you have a paycheck and you didn't have enough money in order to buy shares of an ETF when it dropped down in price because you have to pay your credit card expense, or because you're going on a trip and you have to pay for it, so then that's the time to use margin and get some more shares at a lower price. Now that's an approach I can have as well, but I also have to monitor it very carefully to make sure I don't use too much margin and risk a margin call. So when I decide to use margin after giving some thought for several months, I had to think about whether I can use margin long term and think about growth or consistent cash flow long term as well. I also had to think about too, there's going to be a time that I may not want to use margin, so I got to have a long term approach that I can feel comfortable to stop using margin, say after several years, and still have a net positive cash balance if I decide to sell all the funds a few years later. I hope this is helpful information. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.